Welcome to JP Bullhound's Tech Thoughts. Today is the 18th of February, and we are here with Inge Heydorn and Nejla-Selma for our weekly market roundup. Today, they will give an update about IT hardware, Nvidia, e-commerce, and gaming. Over to them.
Thank you very much, Maria. The market, as you or everybody's seen, is really volatile, driven by red-hot inflation numbers, and I would say the standoff in Ukraine is probably the major thing here. So given that, we have now seen almost all the major companies reporting so far for Q4, and the read-through is really good report. You have slightly positive reaction, some weakness in the report, and you're down quite a lot. Weakness in the report, and you're down 10 plus. So it's been a very tough reporting season. So going over to this week on the hardware side, we've seen Cisco reporting good numbers, but still constrained with volumes. Applied Materials, AMAT, the same thing. And even Nvidia, although they are growing really fast. So there's still supply constraints, but I would almost say that the hardware guys has done almost better share price wise, given the fact that they have delivered, but on the other hand, they're being, as I said, growing backlogs as they haven't delivered as much as expected. So demand is outstripping supply. So going a little bit into detail on Nvidia, numbers really strong, especially on data center. Guidance for Q1 is up almost $1 billion from Q4, which is really strong. The only negative which the market took on board was that the gross margin is expected to be flat Q on Q, although data center is going to grow as portion. So that was taken a little bit negatively by the marketplace. I don't think there's anything big to worry about, and they have a number of software solutions coming out, so we think it will sort itself out. But I think that's the only thing you could hang a negative hat on regarding Nvidia. Going over to Applied, as all the rest of the vendors, demand outstripping supply, building backlog, and so on. But even more important last night was the Intel Capital Markets Day. And they're now guiding for around 27 billion of capex in this year, and around 27 to 30 for the next 2 years, which is very interesting. This is the Intel numbers. On top of that, there will be government subsidies and so on. So the number underneath will be much higher, and it will be start off with quite a lot of shells, as they stated. So really the factories, the buildings, and after that it will come a lot of equipment. So this supports really the case that 2022, where all the vendors have sold out already, 2023 and 2024 will be really healthy markets for the semi-equipment vendors. So that's that. Just a quick comment then on Shopify and e-commerce also, because that's a real big disappointment for the market. I think the market knows that e-commerce is growing as a percent of sales in terms of retail, but that it's a little bit been extra COVID boosted, even on Shopify numbers. I think that was taking a little bit of a negative surprise. On top of that, you had a lot of help from the government in Q1, Q2 last year, with checks and so on being sent out to help the COVID, to ease the COVID pressure in the marketplace. So Shopify guidance was a slight disappointment. Over to you, Nejla.
Thank you, Inge. Okay, so a quick gaming update then. We're starting off with Roblox. Stock tumbled on Wednesday after the video game platform missed Wall Street's estimates for the fourth quarter. On the plus side, Roblox had a record number of daily active users in the fourth quarter, up 33% year over year. However, they were down 26%, 50% from its high, and I believe 2021 was, fine. They came in a little soft, but 2021 was still great. But I'm having a hard time to see how they can grow during 2022. And all the data is kind of suggesting that their growth rates are slowing down. And I believe the reason is because they're not getting the growth rate in foreign countries. They're not expanding enough. So we'll see if they can pull it out. Over to Stillfront. Stillfront Group has released its full year quarter and the Q4 financials. The Swedish firm reported net revenues of 5.45 billion SEK for the fiscal year, which is an increase of 37% year over year. Stillfront was down 16% after hours. The stock was already down 50%. Overall, they're down 60% from their peak. What I saw from the report is that the organic growth is down 5%. And I mean, the fundamental problem with these aggregated strategies is that they really need organic growth, meaning companies that you acquire build other games that stack the rest of the portfolio. And that's not really happening right now. So yeah, we'll see. Taking a look at Embracer, who reported their earnings yesterday, the report showed strong revenue driven by mobile games and success of titles Hot Wheels Unleashed, Valheim, and Deep Rock Galactic. They have a pretty amazing pipeline, 260 game projects in development. Out of 25 AAA games are planning to be released before March 2026. And that's up 66% projects from the 150 games previously in development in the same period last year. The project count has grown a lot due to major acquisitions. And looking at Ubisoft, who also reported last night, the earnings numbers were not great. However, they revealed that they're planning to release a number of highly awaited games over the course of its next fiscal year, which is Mario, Rabbids, Sparks of Hope, Avatar, Frontiers of Pandora, and Skull and Bones. As for potential sale, Ubisoft CEO said on the conference call that Ubisoft can remain independent, but any offer to buy them would be reviewed. This comment has created a lot of discussion circulating around the internet, but yeah, that's more what they're discussing, so we'll see. And lastly, AppLovin shareholders lost ground to the market on Thursday as the stock was down 20%. This was related to the outlook. The outlook brought up the enterprise revenue and brought down the software of the games revenue. So the priority part of this business is games, and games did not do as well as they expected. And I would say that they really need some big hits coming out. Their last couple of releases have not really scaled all that significantly. And now they're below their IPO price. So yeah, we'll see if they can pull it out. That's it for today. Thank you and see you next week.